Hey everyone, welcome back to Corporate Decoder. Today we're diving into Assertio Holdings' latest annual report, so buckle up because this could get a little dry, but don't worry, we will keep it interesting. Let's just say some companies are better at managing their money than others, and this report hints at a few challenges. This report paints a picture of a company in transition. They've made some big moves like acquiring a new key product, but they're also facing some headwinds like increased competition and legal expenses. Let's see if we can make sense of it all. First up, the basics. As of March 7, 2025, Assertio had about 95.8 million shares of common stock outstanding. This is important context when we start talking about profits, losses, and value per share, and what risks shareholders might face. Keep in mind that they are incorporating parts of their upcoming proxy statement, where they'll discuss things like executive pay and who's on the board. It's a sneak peek of what's to come. Assertio is a pharmaceutical company with a focus on a few key areas: oncology, neurology, and pain management. They have a portfolio of drugs, each targeting specific conditions. Rollercoaster is for reducing infection risk in cancer patients. Sympazan helps with seizures related to Lennox-Gastaut syndrome. And then there's a range of pain and arthritis medications like indalsine, and then there's a range of pain and arthritis medications like indocine, SPN-Diocene, SPART, and Diocene, SPART. Well, let's look at the numbers. In 2024, Assertio generated $129 million in net product sales. That's down from $149.5 million sales, so it's carrying a lot of weight. Endurance sales dropped to $26.80 hit, given it used to be their best seller. Also, their net loss was $24.5 million sales, dropped to 26.8 AA, given it used to be their best seller. Also, their net loss was $24.5 million sales, so it's carrying a lot of weight. Endurance sales dropped to 26.8 a hit, given it used to be their best seller. Also, their net loss was $24.5 million sales, so it's carrying a lot of weight. Indocine sales dropped to 26.8 a hit, given it used to be their best seller. Also, their net loss was $24.5 million sales, so it's carrying a lot of weight. Most of Assertio's revenue comes from a few big distributors. Cencora makes up 40%, Macison 30%, and Cardinal Health 8%. That's a lot of eggs in a few baskets, since if they lose one of these major customers, it would impact their business. Assertio faces competition from other pharmaceutical and biotech companies. It sounds like in the case of Rollercoaster, it is battling one other novel long-acting product, 6 biosimilars, and something in development. Dawson is in a really tough spot as generics take over, pressuring prices. The treatment of Lennox-Gastaut syndrome has its own competitors for Sympazan, as do the pain management drugs SPX, Otrexup, and Cambia. There's a lot of regulation in this industry and it can get complex fast. The FDA approval process, third-party payer coverage, and potential fraud and abuse are only some of the challenges they face. Changes to these healthcare laws can impact their bottom line. Assertio says they have 58 full-time employees in the US. The document also mentioned their core values, which are passion, integrity, professionalism, collaboration, and tenacity. It's all about attracting and keeping skilled employees. Now for the not-so-fun part. The report talks about the many risks that Assertio faces. This isn't an exhaustive list, so there may be additional risks that aren't disclosed. If they fail to get or maintain attractive reimbursement of Rollercoaster through government programs like Medicare and Medicaid, then their sales could suffer. Additionally, if they can't drive growth in sales and profitability, their business could be in trouble. They rely on single suppliers for ingredients and manufacturing. This can lead to problems if something happens to those suppliers and is something to keep an eye on. More generics could put pressure on Assertio's products. Generics are already competing for indocine and Cambia, which adversely affects their business. If Assertio's commercialization or licensing deals don't go as planned, or if they have contract disputes, their commercial success could be affected. In addition, the report says that they compete in a very competitive industry, and if the competition has more resources, Assertio could be at a disadvantage. If they can't negotiate acceptable pricing or get good reimbursement for their drugs, their business could suffer, and also their customers are concentrated, so losing a few could cause problems. This is a big one that's still dealing with legal issues related to how Assertio Therapeutics used to market opioids. This takes up time, money, and distracts management. Also, any changes in laws and regulations that apply to the pharmaceutical business, especially in the opioid market, can affect Assertio. If they're found to be promoting off-label uses, they could get hit with big fines. The document says there are also risks with business development. If they don't make good acquisitions or strategic partnerships, or if integrating those acquisitions doesn't go well, that will affect them. Their existing capital might not be enough to fund future operations or acquisitions, and they might not generate enough cash flow to make interest payments on their debt. They have taken on operating losses in the past, and it might happen again. They have a lot of assets, but they depend on future positive cash flows to maintain those values. If they don't get those cash flows, they might have to write down the value of those assets. Their stock could get delisted from the Nasdaq if they don't maintain a minimum share price. The market price of their stock has been quite unstable. If might want to get out. The company was subjected to vote no campaigns and a threatened proxy contest in the run-up to its 2024 annual meeting of stockholders as a result of activist investors. Also, their business could be affected by future proxy fights or actions from activist shareholders, unsolicited takeover attempts, etc. Their success depends on their executive team, and losing key people could cause problems. Their business could be affected by business interruptions like natural disasters, data breaches, and cybersecurity attacks. Any new technologies like AI and ML may result in spending additional resources and present new risks that can impact their business. The SEC staff had no unresolved comments from previous reviews, which is something at least. Cybersecurity is also a key risk. They use third-party vendors, and if those information technology systems of these third parties become subject to disruptions or security breaches, the company may be hurt. The board's audit committee oversees this area. Alright, let's get into the financial statements, starting with the balance sheets. As of December 31, 2024, Assertio has cash and short-term investments of about $100 million and accounts receivable of $54.1 million. On the other hand, they carry a hefty $80.5 million in intangible assets, so they definitely see a lot of value in patents and products they own. They have long-term debt of almost $39 million, so while they have some cash, they also have debts to pay. Moving on to the consolidated statements of comprehensive loss. Product sales were $120.8 million, $8 million 2024, with Rollercoaster making up $60 million of it. Other highlights were mostly products who are declining, such as Indorsin 26.8 M, Simpazan 10.55M. Selling, general, and administrative expenses were $75.1 million, and there was a loss from operations of about $24.5 million. The valuation and qualifying account schedule shows allowances for sales returns and potential credit losses. Finally, the report says that the company's management believes that their internal controls over financial reporting were effective as of the end of 2024 and that the accounting firm Grant Thornton LLP agrees with them. Assertio is involved in several ongoing legal battles, from opioid-related cases to stockholder actions, and these legal matters can take a significant amount of time from the company. Now let's zoom out and see what we can learn from this report. Assertio seems to be heavily relying on Rollercoaster to drive future growth. While it's performing well, they need to make sure they can keep it competitive and protect it from generics. Plus, with generics eating into INDO sales and losses still happening, they really need to focus on efficiency and smart acquisitions. They mention these risks and opportunities are retaining executives, data breaches, trade relations with China, and macroeconomics pressures. Overall, Assertio has a mixed bag here. They've made strategic moves to acquire new products, but they're still dealing with legacy issues and facing a tough competitive landscape. The company needs to show they can manage their debt, control costs, and drive revenue growth to convince investors they're on the right track. It's a company to keep an eye on to see if their bet on Rollercoaster pays off and what the company does with the potential revenue increase. That's all for today's Corporate Decoder, where we do our best to decode the corporate news so you don't have to. If you like this video, please subscribe, like, and comment down below. Let me know what companies and reports you would like me to cover next.